right, 25 minutes before 11 o'clock. Thank you for tuning in this Friday morning. How many of you have been tempted by the advertisements from some of the advanced payday companies that you've seen around town and said, "Oh gosh, you know, I don't have only have a few dollars left. Payday's not for another 5 days, and you know what? I think I'll go in there." And then you borrow maybe $300 or $400 or whatever it is you borrow, and I don't know exactly what you pay, but I have a feeling it's like 10% or something. And I don't mean 10% annual; it's like 10% over the course of that week or something. So you're going to spend $400. I guess you'll spend about $40 if you borrow $400, just using that as an example. I don't know how to say his last name. Joe Colangelo. I'll just take a crack at it. He is the Executive Director of Consumers Research, and he is speaking about this whole payday lender thing. The Washington Times, it says in my notes here, is reporting that members of Florida's congressional delegation have slammed the Consumer Financial Protection Bureau's payday lending rules, saying it's a bad example of one-size-fits-all policy that will limit consumers' banking choices. Let's find out from Joe about this. Joe Colangelo. Good morning, Joe.
Good morning, Larry. Thanks for having me on.
You're welcome. Where are you?
Oh, I'm currently on my way back home from New Hampshire. You know, our organization's based in D.C. We had a monetary conference up in Bretton Woods this last week.
So I thought that in Florida that these were outlawed, and then when we were researching it to do the interview with you, it turns out that they're not outlawed. Obviously, they're still in town. I see the signs on the buildings, and they're outlawed for military personnel. Is that right?
Right. So, you know, I'm not specific. I'm not sure about all of Florida laws, but I know that one of the driving forces all across the country is that there are these, you know, a lot of young people with their first paycheck and not necessarily a lot of financial sense who have joined the military, and they are perfect, so to speak, targets or perfect customers for payday lenders because they're young, they don't have a lot of financial experience, and they have a paycheck that comes every 15 days, or every 15 days that can always be garnished. So I am a former naval officer, and I remember many times working with my sailors who had taken out these loans that were advertised right outside the base gates. You know, get a car, and it turns out you're paying 100% annual interest on your car loan after a few months. So I'm not sure about these Florida-specific rules, but I believe that you know, I wouldn't be surprised if they are outlawed for the military.
Okay. So is there anything in the works to do away with them? And is it? Can we get the other side? Can we get the devil's advocate position, so to speak, in this conversation? I'll give it a shot if I can. I'll try to think of a way to defend them. I think. I mean, I guess the best way to defend them is if you have no other choice, then at least there's a choice. I guess that's.
I would agree. I would agree. And so, you know, I always try to say I don't recommend high interest rate loans. I don't recommend something that describes itself as a payday lender. As if you can avoid it, avoid it. They should not be a regular, conscious choice in your financial banking. It's not a winning proposition. That said, you know, one of the reasons that they exist is because FDIC insured banks are not allowed to lend at you know, exorbitant rates. They cannot make you can't, for example, go to Citibank or Wells Fargo and take out a loan at a 50% interest rate. It's not allowed by law. And so if you happen to represent a 50% credit risk, meaning that you know, 1 out of every 2 loans that you take out, you're not going to pay back, then that bank has no interest in serving you. They certainly won't lend to you at 12% if there's a 50% chance that you're going to run away and default on the loan. So since they can't serve you, somebody has to. And so say that you represent a 30% risk, and the bank can't lend to you above 15%. Well, then the payday lenders, they don't have the sophisticated credit analysis that the banks have. So they just say, you know what, we're going to charge everybody 100%. And so if you're a 30% risk or you're a 90% risk, you're paying that same 100% interest rate.
Okay, so I mean, I guess the solution is easy but hard to abide by, and that would be to budget your money. I mean, to say this is all I have. I'm not going to go above this, and I'll have to save up for whatever it is I need. And again, trying to be devil's advocate at the same time as deliver your point here. If the car breaks down or some other emergency comes about, at least it's there. It's kind of a weird conversation we're having because I can't be 100% one or the other way. You know what I mean?
Right. So you can always say budget your money, save up what you can, but the American consumer that is living paycheck to paycheck and cannot budget their money and, has bills that they have to pay, if they're driving to work and they get a flat tire or they blow out their tire and suddenly they have to either make a choice of $200 to repair a tire and keep their job or not work for another week because they can't get to work.
Yeah.
For them, borrowing $200 and paying $250 2 weeks later, they will and they probably should take that as an alternative to just not being able to get to their job anymore.
Okay, so with that said, do you have a mission goal that you're on right now regarding this?
I think that first off, people need to realize that the Consumer Financial Protection Bureau is coming at this with the best of intentions. What they really want to do is make because almost everybody looks at this problem. They say people are paying 100% for a loan, and they're in among the most vulnerable population. That's not fair. How do we fix it? Well, by outlawing it, there's a chance that you're just going to drive these same people towards the person on the corner who's going to charge a higher interest rate and break their legs if they don't pay it back. Right. By banning payday lending, we're not going to eliminate the consumer need for credit. All we're going to do is make that consumer need find less and less reputable sources to access that credit.
Yeah, absolutely.
So,
yeah.
I would really like to examine kind of usury caps on a state-by-state level. I think, and this is a state regulation, so we can't make a federal lending cap removal. But I think that people should understand the relationship between capping the amount that you can lend to somebody and allowing consumers to access credit. And of course, we always want to better educate consumers. So if you have a choice between taking out a payday loan and not, if it's not a necessity, please avoid it.
Yeah.
And some of these payday lenders, they do more than just that. They provide money orders to people. They provide those on-demand debit cards, so you don't have to use your debit card from your bank account. They even sometimes are set up with the local utility company, and you can pay your bill right there.
Absolutely. So what you're finding there is that they are replicating the service, almost all banking services here, because if a bank cannot, I'll take a step back. There, the implementation of the Dodd-Frank Act over the last few years, which was passed in 2009, it said that banks can't charge for debit card. Banks can no longer charge 2% every time somebody swipes a debit card, which people might say, hey, that's a good idea. People shouldn't have to get charged 2%, or merchants shouldn't have to get charged 2% every time somebody swipes a debit card. But by doing that, it eliminates the ability for banks to make money off of all consumers.
Joe,
and so that's one of the... Sorry, go ahead.
It's okay. We need to take a little break, but we'll be right back. And I do have somebody on hold, so hang in there during the break, and we'll be right back with you. Joe Colangelo. Am I saying your name right, Joe?
Absolutely. Yeah.
And we're talking about the advanced payday lenders and how we can make them maybe a little bit better.
The weather is brought to you by myfwc.com. Safe boating is no accident. Sunshine mixed with clouds today, a thunderstorm or two in the afternoon and into the evening hours. The high 87 to 90. Partly cloudy later tonight with a low of 71 to 75. Partly sunny with a thunderstorm in the afternoon inland tomorrow. High of 86 to 90. Sunny to partly cloudy, another afternoon thunderstorm or two on Sunday. High 88 to 92. From the Florida Weather Center, I'm meteorologist Maggie Johnson.
Legally Yours, brought to you by Fuller & Fuller Attorneys at Law. On the air every Wednesday morning at 10:30 a.m. with John Fuller, a board-certified civil trial lawyer for over 25 years. John welcomes your questions, from business to complex family matters to legal disputes. So tune in every Wednesday morning at 10:30 a.m. for Legally Yours with John Fuller, right here on WOCA 1370 AM and 96.3 FM, The Source.
Are you wasting hundreds or thousands of dollars on termite retreat fees? If you're not with Turner Pest Control, you probably are. Turner Pest Control offers the industry's only termite and pest control package that never charges retreat fees, ever. You can get started today for only $99. This is a value of $500 or more. This includes treatments, installation of monitoring stations, quarterly pest control, and a lifetime guarantee, all for an unbelievable low $99. Even if you have another pest control provider, visit turnerpest.com to find out how you can avoid paying those high termite retreat fees.
Come join New Mail Medical for their town hall at Golden Corral in the Villages on Wedgwood Lane, Tuesday, July 21st and Wednesday, July 22nd from 4 to 6 p.m. Join renowned expert Dr. Christopher Asandra and get your questions answered. He will be discussing the importance of hormonal replacements and common misconceptions for men and women, as well as the importance of sexual health and anti-aging. Now, dinner and refreshments will be provided for those in attendance, along with door raffles and giveaways. But seating is limited, so please call today to reserve your space at the Golden Corral in the Villages on Wedgwood Lane. Call today, 404-4779. That's 404-4779. One more time, 404-4779. And make plans to join New Mail Medical.
All right, 12 minutes before 11 o'clock. Beautiful looking Friday morning, by the way. So we're talking about the advanced payday lenders in the community. I guess they're all in person. I don't know if you can do any of them online. Joe Colangelo is on the phone, and he's talking to us about what the Consumer Financial Protection Bureau is doing about the rules that govern those payday loaning companies. So the rules are regulated, Joe, on a state-by-state basis. Is that accurate?
So almost all financial regulation is done on a state-by-state basis. The Consumer Financial Protection Bureau is federalizing some of that by saying, by making explicit rules for the payday lending subset of the finance industry.
Okay.
Are the different payday lenders wired into each other? So like if a person went to Amscot and got a loan, and then 20 minutes later they went to like Cash Advance America to get another loan, do they know?
So that's a very interesting question. There are some states have regulations where they say where they have made lenders create such a database so that you would not be able to lend to somebody, so that a consumer would not be able to have more than 3 loans out at a single time. So that in those states, and I'm not sure if Florida's one of them, in those states, all of those payday lenders, in order to get a license for lending, you need to wire into that database to check that consumers aren't accessing more than 3 at a time. All
right, Joe, you have a phone call. Let's take that call. They've been waiting for a while now. Good morning. Thank you for waiting. You're on the air now.
Yes, good morning. Yeah, and with the federal employment, including the uniformed services, of course, there are credit unions associated with all of that, and also, if a person is really up against it, he can take a loan from his thrift savings, and that's nowhere near the penalizing of dealing with a payday lender. And I'll ring off and listen to the answer.
Okay, so in other words, I guess some companies and some agencies have credit unions you could use that would maybe have a better alternative. I think what you said earlier, though, really is true, Joe, that if you outlawed advanced payday companies, you would still have people needing them. And like you say, they'd go to the guy on the corner who will break your legs if you don't pay him.
Yeah.
Right. So, I mean, I think that this is 2 important points. The first is that federal employees and a lot of people have access to credit unions, and so there's an education piece that people should be putting some savings, whatever they can, towards this thrift savings, and that if they're looking for if they're looking for money and they can't have and they don't have access to it, payday lending should not be their first course of action here. So, but the second piece is that we can't make regulation based on how the best 90% of the country lives, or how even the best 10% of the country lives. We have to consider the lowest common denominator, and so that the 1% or the 5% of our country that might not have checking accounts or certainly don't have access to a thrift savings account, that's the people that we need to take care of. We can't just consider the people who have access to these services when we're making up the regulations.
So what I guess I'm unclear about is this: is there something in the works to change the way they operate right now, or is it more of a campaign to educate the consumer?
Oh, so the Consumer Financial Protection Bureau is looking at payday lending, and this is something they've released their rules, which will alter the payday lending landscape. And those rules were being examined by Florida Democrats. So Florida's Democrat legislature said, we think we've got a really good idea for how you can regulate payday lending. It gets rid of some of the bad practices, and it still doesn't force all of these companies to shut down.
Okay, so
it makes them behave better. And so the story there in the Washington Times is that they were Democrats, and they thought that their proposal to the Consumer Financial Protection Bureau would be very well received because they were kind of on the same page. But on the federal level, they kind of snubbed them and said, thanks, but no thanks. We know what we're doing here in Washington, D.C., and we don't really need any help from you guys in Florida.
Oh, no. So what was it? I mean, what were the idea? What were they going to? What would have changed?
There are a lot of specifics. I would say that the general one is, without getting into too many details, the federal level was going to be kind of more draconian and put a lot of these payday lenders out of business. And it would open up, depending on how you interpreted some of the statutes, to kind of the criminalization of some standard practices that might not necessarily directly hurt consumers. So the idea that the Florida delegate said, I think we're a little bit closer to this problem, and I think that we can improve it without having any major impact on the industry.
I'm still not clear what the changes are that they were proposing. Is there a way for you to help me understand what they are? What were the changes that they were proposing?
Sure. Sorry.
That's okay. It sounds like you have to look it up, but that's okay. I mean, I'm just curious what would change.
I'm driving at the moment.
Oh, don't. Oh, I didn't. Oh, that's right. You are driving. Don't be looking through your.
No. No. So I'm not able to look anything up at the moment. Is what I'm saying.
All right. Yeah. Don't do that. Well, let me ask this: is there a way for us to look it up? And is it too late? Like, if we want to support if they were snubbed, we say, hey, come on, now this is good stuff. You should pay attention to this. We need to know what it is. Is there a way for us to look online?
The original payday lending rules as part of Dodd-Frank, I believe they were supposed to be released 9 months ago. They were just released now, and they are still under consideration before final implementation. So some of the details there, they call it payday lending. There are a couple subsets here. So there's payday lending, which is where you say, I do have a regular paycheck, and I would like to, I'd like to borrow against my next paycheck. And so that's one of the rules there. And their goal there was to more kind of limits as to what level you could lend at, right? So if somebody represented, like say 50% credit risk, or 100% credit risk, or 99% credit risk, they had a 10% chance of paying it back. These people would then get pushed away from payday lenders. If there was somebody, and so then these people end up, what they have done by kind of some of the rules that have already gone into effect is created this industry for car title lending. And so a car title loan is one in which you own your car and you bring your car title to the lender, and it's basically a pawn shop, right? It's a pawn shop for your car title.
Right. Okay.
And so if you don't have a steady paycheck, but you do have an asset, and it's, then if you have a gold watch, you go to a pawn shop. If you have a car, then you go to a car title lender, and they'll advance you $3,000 against your $5,000 car. And if you cannot make the loan payments there, then they get your car. And again, this is a really not great thing for consumers, because these are the vulnerable. This is kind of the most vulnerable group, and they really need their cars to get to their jobs.
Yeah.
And so you go for pay lenders, and then you start, you make that kind of difficult to access, and you drive people towards car title lenders. And looking at this, and very fairly, they're saying, hey, this is a raw deal for these consumers. So now they're making car title lenders, kind of persona non grata. And again, I don't want to say that everybody should go to car title lenders. I think that's a really bad idea. But by getting rid of car title lenders, or by cracking down on them, you're not getting rid of the consumer demand for credit. You're just pushing them towards another source. And so this is kind of an unintended consequence of a very
yeah. So it sounds. It does sound like you're representing a viewpoint that is balanced, which is a good thing. I mean, it looks like you're looking at both sides of it. Boy, I tried just this topic while you were talking real quick to see if I could find what you might have in your papers, and it is amazing how I have to fill out these forms if I'm looking for a loan. I'm looking for the Dodd-Frank payday loan information, and it looks like I'm going to get it when I see the link on Google, but when I click on it, it's like this form to fill out so that I can apply for a loan. Crazy.
So it seems to me, though, that the federal government, one of the reasons they're up in arms about this is because the federal government make money from the banks that loan out the money from the interest, and that the federal government isn't making any money from the interest on the loans of payday lenders?
Right. Well, Robin, that is a very cynical view. So I would say there are many cynics that say, look, the reason the government's cracking down on payday lending is because they're not donating to their campaigns, and they're not, they've got friends in the bank system, and every time that a payday lender provides a service to somebody the bank wants as a customer, which again isn't everybody, because they're serving sometimes just different populations, but there's some overlap. Every time that takes away the bank's profit, which takes away our profit, our tax revenue. I mean, they came out with rules that, I don't know, I mean, they make sense, right? So one of them, to get into the specifics, is a loan should be paid back within 45 days. Every payday lender. So you can imagine saying, hey, like this makes sense. Why should somebody take out a 3-year loan, right, from a payday lender with exorbitant interest? That doesn't make sense. But by limiting it to 45 days, you're not getting their long-term problem. You're getting it to a point where when they come back in 45 days and they don't have that money, it's going to hurt their credit even more. It's going to mean that maybe they'll have to take out a second loan instead of one longer loan. And so I don't pretend to know exactly how that's going to affect things, but I know that it's not going to solve the problem. And so I have a bit of a intellectual humility in dealing with this, in that I want to give as much opportunity to consumers to have the power for their own credit terms.
Right. Well, Joe, be careful driving, first of all. Thank you for being on the air with us to talk about this. Do you have a website that the listeners can go to? We've got about 20 seconds.
Consumersresearch.org, and we really look, and follow us on Twitter at Consumers First.
Okay, consumersresearch.org. Excellent. Robin actually already has that on the guest list. Joe Colangelo, thank you for what you're doing and for helping us understand this. We'll be right back.
Broadcasting from the Paddock Mall Studios, this is WOCA, Ocala, Gainesville, The Villages, 1370 AM, 96.3 FM, The Source.
Fox News Radio, I'm Pat O'Neill. A shock in Chattanooga, Tennessee after yesterday's military site shootings that killed 4 Marines.
Bullet holes all over it. Through 2009. to join the military.
It turns out the killer, Mohammed Youssef Abdulaziz, was an engineering student at the University of Tennessee.
Between 2009 and 2010 as a student intern for the Tennessee Valley electrical utility, where he would have had to have gone through a background check.
Fox's John Roberts. As the search goes on for Mexican drug lord El Chapo Guzman, authorities are trying to gauge the drug trade impact since his prison escape last weekend.
Chapo's the most wanted man again in the world now, and it's hard to manage your empire when you're on the run.
Chicago DEA Director Dennis Widgham. A top European official says a way's been found to get Greece more than $7 billion in short-term cash. It has a debt payment due next week. Fox News, we report, you decide.
Andro 400, I really love it. I've lost 50 pounds. I was a size 38 waist. I've gone down to a 32 waist. My mood has changed. I don't get stressed out. It gave me so much more energy. It feels like I'm 25. I'm so happy. I'm just a completely different man.
Guys, if you'd like to see results like Dave Ryan's, try Andro 400, the safe, inexpensive way to boost your testosterone. Go to andro400.com or call 866-546-1955. 866-546-1955.
Geico applauds your inner happy camper.
A merit badge of awesomeness goes out to the part of you that wants to put the recreation in recreational vehicle. The part of you that packs up everything and everybody in the RV and says, let's get this show on the road. Because Geico has specialized agents who help save money on more than just car insurance. Geico will insure that entire RV, so you can get the s'more making, poison ivy dodging, same song singing, ghost storytelling, campfire building, best time you ever had with your family show on the road.
Geico for your RV. See how much you could save.
It's time for Farm and Ranch headlines on the Southeast AgNet. I'm Tyron Spearman reporting. The National Peanut Board, which is the 1% checkoff by farmers growing peanuts, has set a strategic direction for fiscal year 16. It's a program of work and a budget that will be discussed at their next quarterly board meeting, August 10th through the 13th. This time it will be held in Suffolk, Virginia. Meetings will take place at the Suffolk Center for Cultural Arts. The meeting is open to the farmers who participate. On Tuesday afternoon, the board members will tour Amatis Industries, a leading manufacturer of advanced harvest systems, followed by a dinner hosted by Birdsong Peanuts. But that's the National Peanut Board having their planning and budget meeting as they plan to spend about $6 to $8 million next year promoting peanuts.
The Environmental Quality Incentives Program, or EQIP, is a continuous sign-up program allowing landowners or operators to apply for financial and technical assistance for many types of conservation practices. And USDA's Natural Resources Conservation Service in Florida has made it easy to get more details. Just log on to www.fl.nrcs.usda.gov. You'll find state resource concerns along with links to more detailed information on the overall EQIP program. Or you can simply stop by your local USDA NRCS office.
The USDA is seeking nominations now for peanut producers and industry representatives to serve on the Peanut Standards Board. The board consists of 18 members and is equally divided between peanut producers and industry reps. Agriculture Secretary Tom Vilsack will appoint one producer and one industry representative from each region to succeed members whose terms expire June the 30th,